All right, NVDA on Friday closed pretty much flat, 104.75. That's where we are going into the next week of August, and also big option expiration for the August. So what I'm watching for this name. So one thing I want to mention here is that this name has pretty big range of average true range. What that is, it's $7.64 for the past 2 weeks. For a stock that is only $104, $105 stock, that is a big range. That is 7% range for a $2.57 trillion stock. We have only like 7 stocks that are above $1 trillion, and they don't move 2% up or down compared to NVIDIA, which is in a 7% range for the past 2 weeks, which means it is highly volatile. Why am I bringing it up? You can see the price action. So if you are somebody who tried to trade it up or down, I'm sure, especially with options, put options or call options, I'm sure most people are frustrated because they're losing money, because this is dreamland for institutions who have been selling throughout the year. Every single year, if I have been coming down to take a look at the most active options in stock market, and it has always been top 3 mostly traded, highest volume trader stock in an entire stock market. NVDA today, even on a Friday where overall market was a little bit choppy and we didn't do too much, it traded with almost 4 million option volume, 44% calls, 44% puts, 55% calls. So that's what you need to understand as a trader, as somebody who is trying to just purely buy. Just me personally, I don't do those strategies where I have deep pockets where I could just sell naked puts and collect the premium, or sell calls to collect the premium when implied volatility is very high. You can see they are about to report earnings, and that is also baked into the stock implied volatility, because all other basically semiconductors have already reported earnings, but Nvidia reports after market close 28th of August. So if you are somebody who is trading, again, these are not financial advice, but if you're somebody who's trying to trade options, you need to understand that you would be overpaying for premiums all the way to the end of August if you're about to trade this name or you're trading this name. You're paying premium, you're paying the market price, which is expensive in my opinion. And you can see 7% up or down. I mean, there are many small caps, they don't even move 7% up or down, let alone maybe the 4th largest market capitalization stock in an entire, maybe 3rd, top 3 in an entire S&P 500. So that is very unusual, but this is dreamland for those people with deep pockets and basically institutions who have had very nice liquidity in this name. That's why they are in it. So that's why they have been taking advantage of retail interest in this name throughout the day, throughout the year, through every single day, every single week, every single month, selling the premium. Calls and puts outside of the money. And that's what you need to understand, especially going into the earnings. You got to be careful. So right here, right now, yes, we have pulled back quite a bit, which is 30+%. At the moment, this pullback is 25%. So from here, the resistance for this name, of course, we have this 106 sort of acting as a resistance, and we have this breakdown of 117. That's what I would be watching as a resistance. And also going into the earnings, 50-day moving average is hovering around this $120 level. That's the resistance I would be watching. Can it go up there? Absolutely. But we would see what the guidance is going to be for this name, because we know earnings are already baked in. They have reported very nice earnings, and typically, I mean, I have talked about this many times. When you see a stock, when market needs a little bit more information, you can see last time it reported earnings, it was exactly at this level. It did gap up to these $105, $106 levels. And this is exactly where we're sitting. Going into earnings, we can hover around this name range, go up or down, but it'll be right there because market needs a little bit more information. This rally right here was basically speculation on stock split and strong earnings, strong guidance, but it's all up to what they are going to report going from there. So if they report strong earnings, yes, then you might seek to for deeper maybe correction. But this correction, I mean, for some people it's enough, but I'm not buying anything here for NVDA because I know that implied volatility is very high. Premiums are very expensive. So I'd be watching this name in this range. I don't expect this name to do too much unless we have something unusual in the market, such as like Japan, where it could definitely go test its 200-day moving average, which is $82 levels. So can it go there? Absolutely. But at this moment in time, this 95 where it broke out after earnings report last quarter, that's the support I would be watching. And also the $100 maybe psychological level to keep an eye on, because if it does close below that level, because we only had one day on Wednesday close below it, but we haven't had a day where it closed below $100 levels throughout this action where range was very high. So very volatile stock. You got to be careful. That's what I'm watching. If you're new, don't forget to like, subscribe. See you in the next one.